Good morning. How we doing, ladies? How we doing? How we doing? How we doing? How we doing? Morning, Schneider. Good morning. No, don't want to do that. Definitely don't want to do that. How's everybody doing? Are we well? Why are you doing that? That's so annoying. Connect, goddamn you. He's just dead. He's dead. Let's get the party started. Da, 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 da. What's super annoying is that I can't trade without music. That's why I just don't like coming on YouTube, guys. I'm just being honest with you. I'm just being brutally honest with you. That's the real source. Is that I need music. But I got a message from YouTube saying you need to stop playing copyright music or you're gonna get banned. I was like, oh god, they're coming after me now. So it's so annoying. Why is it not connecting to my AirPods? Let's try this again. I think they might just be dead. Hello, Marcus Montano. I probably absolutely destroyed how you say that, so I apologise. Montano. Let me guess. Are you Canadian? Sounds like a very Canadian name. Douche! Alright, I just think these are dead. I'm just playing on the fact that they're dead. Oh. If I get banned, I get banned. I can't. Romanian. Alright. When I was a very young pup, before my current missus, who I've been with for 14 years, I used to date a Romanian. She was an amazing girl. Amazing girl. Half Romanian, half English. So, that was cool. But how's everybody doing today? Is everybody okay? How did everyone finish their days yesterday? We finished green yesterday inside Red Pill, which was awesome. Has anyone traded this morning? Anyone taken any successful trades? What's the situation? Green. Jonathan Schneider's green. Very nice. Good stuff, broski. I like to see that. So early on in the day. So technically your day is done, hey John. Technically your day is done. You're finished for the day. What time is it? Where you live? Where are you from, John? Where are you from, John? You're a red pill dude. I recognize your face. USA. Cool, bro. Nice. So it's super early where you are. I don't know if you're on the east or west coast, but either way, it's early, right? And you're already done, which is awesome. Jonathan in the house. CT. What does that say? CT? I don't know what CT is. CT. It's not Cali. Got to go through the states in my head now. I don't know what. You have to forgive me. I'm from the other side of the pond. Connecticut. Ah, nice. I don't know much about Connecticut, I'll be honest. But from what I hear, it's a lovely place. Let's have a look at today. Start breaking this down. So what's important to know is yesterday's high and low, right? Yesterday's range. And we ended yesterday's range inside of a premium, right? We ended yesterday's range inside of a premium. So I'll be honest with you, this is the first time I've sat down in my chart since yesterday. So we're doing this together. But yesterday we finished in a premium. And price hadn't fully rebalanced this range, right? We got down to equilibrium, but we hadn't got down into the OTE. Well, if we look at what's happened today during Asia, what did we ping to a tick? What did we ping to a tick? 62%, right? So we have fulfilled that objective of running down to a discount, right? So in very, very simple terms, I am personally expecting price to run bullish. Why? Because this sell side was purged, and this was the accumulation to move the market long. So price has come back. OTE. Let's see what's happened today. So we've purged the Asia low, moved higher. Let's have a look at this range. So again, we've moved back into an OTE of this range. We got news. What time we got news? So we got news today. We got retail sales at 8:30. That's pretty much it in terms of the high impact news event. So I'll be keeping a close eye on that. But if we just go top down. So for me, let's break down top down. Let's go top down on this. Wait 1 second. All right, so we had, so this is the weekly, right? And we had this bullish order block on the weekly, right? And then we had this BISI form between these two candles, right? These 2 weeks, we dipped down and filled this BISI and filled into this bullish order block. This candle came down, swept this low, and again ran into this weekly order block. Last week, we ran down to consequential encroachment of this weekly order block. And then this week, we've run down to CE almost of this weekly wick. So for me, this is, an indication of accumulation to move price higher. If you're looking at who's net long at the moment, well, the people who are net long are up here for me, right? So if we drop down to the daily, like none of this has been purged, none of it on the daily, right? So anyone who's long, short here, sorry, is in the green, in the green, in the green, in the green. So even if your premise is bearish, you'd anticipate that price is likely to drive higher to come and sweep that buy side. I was looking for this yesterday, but the trade, it ran out of gas. So yesterday it punched through an order block that I was originally looking for. We stayed super patient, waited for it to fill the bissies on the 15-minute, take the sell side, then we traded it up. So we absolutely bagged yesterday. Didn't quite get to 72, but that objective is still on the cards, which could quite easily take place today. So I'm expecting price to drive higher today. Let's just have a look at this previous candle, see where we sit on that. Just turn it into a quad fib. Let's have a look at this order block. So again, we've dipped down into medium threshold of the daily order block as well. So that's gonna cover my weekly top-down analysis. We also, just bear in mind for those of you who have followed me for a while, you'll know my broadening formation. I'm looking at the BPR, and you know that we've been accumulating a lot with inside this BPR, and we also had this BISI which coincided with this BPR, and we've just been bouncing in between the two BPRs. Well, you know, we've accumulated a lot of longs here, but none of this has been purged on the buy side, right? So I'm expecting price to drive higher to tackle this, moving out of the BPR, which has been accumulation, and I use these as support. So I'm bullish until this cracks. If this cracks, then my bias switches to bearish. But until this piece of price action here, which is this BPR, and the BPR is this down close candle, which is traded right through and then back through this BPR, and then it happens again, right? So this is BPR inside of a broadening formation, right? And if you guys just want a very basically I basically back tested this to death, but I can show you an example. So this is one example. You know, so this is broadening formation. You're looking at the BPR inside of the broadening formation to act as support, and you can see our price came down, respected it, and moved higher, right? So that's on a lower time frame. I'll show you a bearish example. This is a bearish example, right? So you have broadening formation, BPR within inside that, and it's used as resistance. So the same premise applies, it's just on a higher time frame, right? This is the BPR on the higher time frame. So I'm expecting this to be treated as support for price to move higher. And then obviously if price breaks this, then my bias will switch to bearish. So I'm looking for a price to expand higher to take the buy side. Drop down to the hourly. So this is what we traded yesterday. So we took this out of this OTE, and if we can break that down for briefly actually. So if we just switch this onto the 15-minute. So this is where we went long yesterday, right? Because you had this breaker block on the 15, right? So we had the low, the high, the lower low, which took the sell side, aggressive displacement higher, right? When price moved away and came back, you know, it's something I teach is to look for a breakaway gap, and price is likely to revert back to that. So when price was crashing through, this was an area where I was looking to, you know, go long. We also had this sell side, which was below here, and price came and ran and tagged this, and this was inside of that OT of the range, right? So this BISI, as soon as this BISI got filled, this is where we went long. In there, inside that. Why is that not working? Inside there, right? Inside that BISI, right? And that's where we went long and drove the price higher. We took it all the way up to this high. So if we just jump back onto the hourly, this is that piece of price action on the hourly, right? Ran down into the OTE, it filled those BISIs on the 15-minute, and we drove it higher. Now, what was key yesterday and what was giving, you know, further confidence to hold the trade was how price was respecting the order blocks, right? So, you know, price moved down, moved higher, and then, but on this leg up, what did we create here? We created, you know, 2 order blocks. You know, these are order blocks, and you know, we say wicks do the damage, body tells the story. Well, the wicks wicked into those 15-minute bissies, right? Buy side inefficiencies. Sorry. Buy side and balance sell side inefficiency, but held the order block. So the majority of the volume was held in between the order block, right? And so this was confirmation to keep price, to drive price higher. Okay, and then you can see on this candle, right? This was further confirmation when we were in the trade that when price came back and respected this, that was a sign that price was wanting to move away. You know, hit the very, very top of this order block, which you know is the most sensitive part before aggressively moving away. All right. And then on this candle, and this was on the data wick, you know, if you don't believe me, ask guys in Red Pill. You know, I had an order literally sat at the low of this on the 1 minute because I was expecting price to dip down into a BISI, which was underneath a fair value gap. And I got, you know, a few handles out of that. But price swept the sell side and aggressively moved higher up to the final target, which was up at that sort of 54, 55 level, right? So what's happened today is price has just pegged slowly down, and we've come and taken the low, but fallen into this range's OTE, right? So if we just look at this range, right, price has fallen back into 62% of yesterday's high and low. Right, but we've taken out this sell side, and now price has expanded higher. Okay, back into this fair value gap, and before moving lower. All right, to fill in this BISI. Right, so if we just, you know, if we look at this BISI here, you know, it's filled in this BISI now. Right, so all of this, right, it's just reaccumulating inside this order block. So for me, I'm expecting price to drive higher. You know, we've taken the sell side here. Anyone who was, you know, net long here was taken out. Anyone who was in here or here originally, right, has been taken out because they would have trailed their stop here. So this is like from a market maker's position. You know, where's the liquidity? You know, it's clear as day is where the liquidity is. Where it's all the way up here, right? You got the pools of liquidity there, pools of liquidity here, pools of liquidity there. More liquidity was engineered yesterday, so I'm expecting price to drive higher. It's just looking for a safe entry. Well, price run down to 62. This would have been a great area to go long. You know, if you're purely just trading the hourly chart, you know, but we have these yellow lines which indicate that balanced price range on the daily, right? You can see how long we spent inside that BPR. Okay, so I don't expect price necessarily to go all the way back down to this BPR. For me, I'm looking for price to drive higher and expand higher now, right? So, you know, we can drop down onto a lower time frame and see what's going on. Well, you know, this hourly candle, when we took the sell side, is this candle here, and this was the 62%, right? This is the 62%. So if I just switch this back to the usual fib, right? This is 62% to a T. Now, what is it left? It's left a rejection block, right? So this is a clear as day rejection block, right? On the 15-minute is when I personally use it. This guy is an absolute dweeb. Like, you're a dweeb, Chris Chendio. Do you know that? You're such a dweeb. Oh wow, it just makes me laugh. It really does make me laugh. Like some people, how they spend their life, it just makes me laugh. So I'm expecting, you know, price came down and, you know, swept this sell side, and it's left this rejection block. So this is open for me, and so if price comes down to this rejection block, I will certainly be looking at taking longs, right? I was certainly looking to take longs. I hope it gets down there. I hope it gets down there again. I'm uneasy taking a position long here because it's just, it's just Chopsville ahead of news at 8:30. But we've got this this BISI here, which was filled on this candle, and it ran into an order block that we have here. But for me personally, if I'm looking for like the lowest possible risk entry, it'll be back down inside this rejection block, which again would be at inside of a premium, a discount, sorry. And I like to, if I'm gonna long, I like to position myself with market makers. So I like to get in with the market makers, right? Like if you had I always say, if you had like 10 million bucks right now to spend, would you be placing it into the market right here, like right now? Like, be honest with yourself. If you had 10 million bucks, would you put it in the market right now? Like, the reality is, you'd probably say no. I'd probably wait. And you got to treat every single trade the same way, or the trade the same mindset. And you're going to miss out on trades. You're going to miss out on opportunities. It's the way the cookie crumbles, right? You can't trade every single trade, right? It's just not realistic, and not every moment is a time to take a trade. Like, when to trade is as important as when not to take a trade. So for me, if I'm looking for to get in with the market makers, to get in with the smart money, well, I want to be getting in with the lowest possible risk, and my stop would be below the rejection block, right? That's where I'd be looking to get in to go long. And if it cracks through that, then obviously if we know our PDRA matrix, what's after rejection block, or rejection block's an old low. So if it starts cracking through that, then we're back inside BPR again. And I'll be looking to take these lows. I mean, it's very black and white, that entry. It's like, if I get on this rejection block and it fails the rejection block low, well, that trade thesis doesn't work. But, if I'm entering here, it's like, well, price still has the opportunity to get down to that rejection block. So why am I giving myself, why am I putting so much risk on myself to get in here with the potential of getting down here, right? If this goes and it just runs, that's cool. I'm fine with that. If I was at the desk at 3 o'clock in the morning and I'd seen this setup, I would have entered here and I'd still be holding. That's the difference, right? I didn't. So if I'm getting in here, I feel like I'm chasing. I don't like chasing price. But if we look at this range, we have technically come down into an OTE. But for me, I'd still like it to, run deeper and back into this wider range to pick up longs. We also have news at 8:30, so I don't really want to be trading ahead of that. Let's have a quick look at what's going on here. So, if we just look at, where's the liquidity, right? If we're just looking at where is the liquidity, well, if this all remains, that'd be incredible. Like, if that is all still there ahead of the news, instead of ahead of the open, that'd be incredible, right? Because there's just so much liquidity that's sat there, and all of these people are net green. Market makers, certainly don't want that if they're going to drive the market lower, right? They're certainly going to want to come and sweep this. And what did we have? Yesterday build up? Well, we've engineered more relative equal highs, right? We've got high, there's more of it. And what have we got just above that? Well, if we zoom in on this price action, we look at all of this buy side that's sat here. So for me, I'm looking for price to drive up and clean some of this out, right? To take this. And so, as I was mentioning yesterday, low hanging fruit would be, we have a MIP block there. And then if we also go back to the hourly, I've got the price target of 72. We didn't get it yesterday, but it's still, that my draw is 72. Until 72 is hit, that is what I'm after. Until that BPR is broken, this is my target. So I'm just looking for safe entries to get in to drive price higher. And then I'm just, the way I'm trading it is that I'm just trading on PD arrays. Once I get in, just taking internal range liquidity. And then if it pulls back and stops me out in the trade, you know, it stops me out in the trade. So I'm not like getting in and saying, well, I'm waiting for 72. I'm just going to hold the whole trade, right? That's my draw on liquidity. But on the way, we have pools of liquidity en route where I'm obviously taking partials. And if it hits that and then falls back, well, you know, so be it. And yesterday I ended up taking like just over 30 handles doing, you know, exactly that, right? So, you know, low hanging fruit objective for me would be, you know, taking this pool of liquidity, which is sat just here. And this liquidity here as well, you know, so I'll be, you know, looking at taking partials in these areas. Price pinged 15-minute volume imbalance this morning, failed that. Let's have a look at the SMT, see what's going on. Does that make sense, guys? Do you get what I'm talking about? If you got any questions about that, or you got any thoughts, you know, let me know. You know, two-way conversation. This order block for me is just, you know, accumulation of longs. Every time it dips back into, it's an accumulation of long. Have a look at SMT quickly. It's got so much liquidity up here on ES. NQ's obviously taking the NQ's taking the highs. ES is flatlined, and NQ took the highs. YM, sorry. So I'm expecting ES to come take these highs. But as I said, nothing for me. I'm not expecting, even if I was to trade this from there to there, from 45 to 50, it's like, it's not my, I'm not interested in sort of 5 handles. Yay, 2 days in a row. I made it, wise trader. I made it. I made it on. But you just got to be really open with yourself. Like, these days aren't, they're not easy to trade, right? I mean, if you're a neophyte trader, just looking at these daily candles would strike fear into your eyes, right? It would strike fear into your eyes. It's not easy to trade this. So the key to it is, when you are trading these conditions, is to stay incredibly, incredibly patient. And don't think like you have to have the answer all of the time. It's okay to wait for the market to give you more information, right? I was hoping we'd take those lows during the New York session. For me, right now, we're in the middle, and I don't diddle in the middle. See what happens at 8:30 and New York open. Don't diddle in the middle. I might nick that. Is ill Simsley. I like it. I don't diddle in the middle. I mean, for me, yeah. I mean, we are, just hovering around. If we're looking at this range as our high to low. If we're classifying this as external range liquidity, right? Because this took this sell side and this sell side, so this is external range liquidity low. So that's a dealing range low, right? And then we have this high, which is the external dealing range high. Okay, so this is all internal range liquidity. So if we're looking at this as our dealing range, right, we're inside premium of that dealing range. However, where the order blocks form are inside of a discount. So if you just flip this fib around, right? And so it's in between, just bouncing in between a discount and a premium of this dealing range, right? Just accumulating. But for me, you have to ask yourself, where is the liquidity? And for me, the liquidity is up here, because absolutely none of this has been purged. And we have all of these, we have these housed orders blocks, and if you know how to reprice, well, price has been respecting these levels, to a tick, right? The order blocks, the volumes being within inside the order blocks. Every time we're coming down, we're just re-dipping into that order block. Okay, so now we're just looking for safe entries to go long. So for me, a safe entry, as I was mentioning earlier, is back down inside this rejection block on the 15-minute. For me, they're super, super powerful. I like them. They're my favorite rejection blocks. And it's a clear as day rejection block. So we have the liquidity, swept it, ran into this order block, moved higher, right? If we can get down back into this rejection block, this is where I'll be looking to frame entries long. But price could honestly just rally without me. That's why I had this fair value gap here. But this is what I say, and I preach this so often. Like, I see so many trades throughout the day, and if you don't believe me, ask anyone. Anyone who's seen me trade day in, day out. I'm expecting price to come and take these highs. I mean, just look at this liquidity that's pulled up here. But I don't need to trade it, right? I just don't need to trade it. Having the ability to see a trade and not execute is the highest form of discipline that you can have as a trader. All right, we had this clear SMT. We have NQ, YM both taking the highs. ES hadn't, right? We're expecting therefore price to come and take these highs, right? It wasn't difficult. Do I need to trade that? No. Why would I not trade that? Because firstly, it's not in a discount, which is where I go long. I have very, very strict rules. If I can only long in a discount and I can only short in a premium. Well, we're inside of a premium of this range now. So I don't want to be going long inside of a premium. As soon as you get over equilibrium of a range, your probabilities drop dramatically. All right, and that's when you can end up becoming engineered liquidity, right? When you're entering longs inside of a premium. And so this is a premium, all right? So yes, I could take this long and take my 5 handles, but is that a good trade? No, it's not a good trade, because it's like a C- trade setup. You know, your job should be looking for A plus setups and staying patient and waiting on those, right? So where I'd want to be going long is off a retracement into 62%. That would be borderline, right? This is, you know, this is where you should be getting in, or even better, down on the wider time frame when prices are all the way down here, rebalancing this previous leg, right? This is again 62%, right, to a tick. So, you know, that's, you know, these are your safe entries. You know, when price feels like it's going to break on you, that's when you should be going looking for longs, right? You should be looking to long in discounts on down candles, and you should be looking to short on up candles in premium. Okay, so when price is here, you know, we're inside of a premium and the range is tight for me. You know, it could continue going, but I just don't want to be, you know, looking for 5 handles in a premium when I could easily just end up being liquidity, right? So anyone who is trading in here, you know, you don't feel safe. You know, that's just liquidity. You know, and the market's likely to come and tag you and run on your stops. So this is where you want to be getting in, right? When you get these nice clean moves, clean price action of very, very simple locations and entries. That's it. I need to work out a better name to call you, because Il Simsley is not the easiest to get off the tongue. Il Simsley. But yeah, 100%. 100%. You know, it's so tempting to jump in on these. It's so tempting to go, oh, you know, I can take these trades and, you know, and scoop my 5 handles. But, you know, more times than not, you're just going to find yourself frustrated. Sims. Remember the game Sim City? What a game that was. See if my AirPods have got any juice. No is the answer. Just gonna go put these on charge. Be 2 seconds. All right, all right, all right. What's up, Scraps? Just noticed Scraps is in the house. One of our mods over in Red Pill. How'd you finish your day yesterday, Scraps? I don't know if you're still here, bro. Yeah, I think you might have missed it, Il Simsy. I was talking about this before you got on. You working all day? That's alright, I can go over it again. More drum edits. Dude, that studio looks insane, bro. Really does. Looks like that's the kind of thing that controls the markets, bro. So let's have a quick look at the weekly draw. Right, so we can start up here. Start on the weekly. So for me, if we break down this, okay, so looking at this piece of price action here, what's actually taking place? Well, this is an order block, right? Down close candle before bullish run. Okay. Price has dipped into this order block on 2 occasions. We've also had this BISI that was here, that was filled, right? And then on this candle, we took out the sell side and ran back into this order block before expanding higher, right? This candle, we ran into consequential encroachment of this weekly wick. And the week we're currently on, we've ran into pretty much consequential encroachment of this weekly wick. We've actually ran into 25% and we bounced off 25% yesterday. Is what we're bouncing in between, right? So we're getting compression before expansion. Now, if we drop down to daily, we have to start looking at where the pools of liquidity are, right? And who's sort of net long, right? Who's set to do well? Well, if we look at the daily, what's the low on this candle? 12.25, 41.12.25. Low of this candle, 41.11.25. So this low has been purged, okay? So we have this candle which ran into consequential encroachment before moving higher. And then we've run down into, again, equilibrium of this order block, right? So if we just wrote a fib over this, right? On this daily, we've run down into consequential encroachment, okay? That's where we're hovering. That's where we find ourselves, of this order block. So for me, I'm expecting, looking for price to draw up and tag the liquidity that hasn't been purged yet. So where is all of the liquidity? Well, we have a ton there. Anyone who was short is doing okay. Anyone who was short here is doing okay. Anyone short here was doing okay. Everyone who was short here is doing okay. None of it has been purged. Yet on the sell side, we have purged the sell side. And all we have is these 2 days, right? Whereas we have all of this up here and all of this, which has not been purged, right? So I'm expecting price to drive higher. I'm bullish. We can also then start looking at technical price delivery and looking at that. And this is broadening formation, something which I've back tested. And we're looking at the balanced price range inside of the broadening formation. All right, and if you don't know what broadening formation is, it's I'll be doing a video on it soon, but it's something I've been back testing for a while now. This is a bullish example of broadening formation. You're looking for the BPR. You can look how price comes back, responds, uses it as support, right? That's a bullish example. This is a bearish example. Same thing, looking for BPR inside of the broadening formation. It's used as resistance on this occasion. So this is the same premise as we know time is fractal. I'm looking at this BPR inside of this broadening formation. And until this cracks, I'm bullish, right? So every time prices come into this, we've been going long inside red pill, and that's why we've been doing so well, right? Every time it comes into here, we're looking to frame entries to go long, right? Inside of this BPR, balanced price range. Until this cracks, I'm macro bullish. So I'm looking for price targets on the daily to come and take all of this liquidity here that hasn't been purged yet, right? So if we just jump back onto the weekly, these lines are the weekly wick, right? As we know, wicks are gaps, and they work like any gap, fair value gap, in the sense that you can use your quad fib, okay? And price will respect these levels. Okay, and you're looking for how price respects, and you can take partials at these levels, or you can look to see how price respects it. Okay, so you know, on the weekly, where do they stack up? Okay, well, equilibrium of that weekly wick is up at one sort of 41.65. The high of it's 41.72. Okay, so if we're looking for price to expand and take that out, we're expecting price to come and take the high of this previous wick, right? Which, if price expands, would leave these two weekly candles as order blocks, right? If price continues to expand higher. So again, playing in some bias, I'm expecting price to drive higher. Okay. Also, with the premise that these are two down close candles being order blocks, so I'm expecting price to expand higher for these to become and used as order blocks. They become valid as order blocks when price trades through them, right? So I'm expecting price to trade through these, which would leave us looking for price targets up here. So at the moment, we've just been bouncing in between this BPR, but where I'm looking is where is all the liquidity? Well, the liquidity is all up here. So I'm expecting price to drive and punch through this. Okay, so if we jump down onto the hourly, all right, we can start, you know, narrowing it down and looking at price targets. So I'll just clear this stuff off because I've been messing around with you guys today. You know, we have this fair value gap, which I'd expect to turn into an inverted fair value gap if it gets traded through. But the price targets that I'm looking for is a swing low off this of two times standard deviations, right? Which puts us at 41.72. All right. We also have this rejection block here at 41.69.75. That's my target to take out these. So I'm bullish until we get up here and start taking these out. And I'm just looking for low risk entries to go long. Above that, we have this mitigation block. And above that, we have this SIBI. And these are my draws and liquidity. This is where I'm expecting price to get up to. Okay. Not necessarily that's going to say that's going to happen today, but these are my draws on where I'm looking for price to reach up to. So, you know, the sensible thing is to take partials at these levels, okay, and pay the trader. All right. But what else do we have at 41.72? 41.72 is a new weekly opening gap. All right. So this is where you start layering confluences as to why price is going to want to reach up there. Does that answer your question, Il Simsley? So for me, I'm just saying super patient. Yeah, you can see setups all day long, but you know whether you don't need to trade them all. So wait for one that suits your criteria. Twelve of you in here, 8 likes. 4 of you just need to go over to the like button and go boop. All right, sharing is caring, sharing the love. Sure, boop. There we go. 3 of you left. 3 of you left who have not done it. 2 of you. There's always one, isn't there? There's always one. I'm not gonna click like. I'm not gonna do it. I booped. Booped. So for me, like if you start entering in here, this is when you're entering in the realms of being engineered liquidity. Okay, and this is exactly why I didn't take this long here. This doesn't interest me. I don't want to be entering inside of a goddamn premium. So guys and gals, consider adopting that for yourself, because it puts the probability so much more in your favor. If you make sure you only long in a discount and you only short in a premium, I guarantee you your trading will change overnight. Literally change overnight. Let's have a look at yesterday's price action whilst that is doing absolutely diddly squat. Who of those of you on here follow me on Twitter? How many of you follow me on Twitter? You all from Twitter? Oh. Sergio. We also came into, and we'll be closing a weekly price gap if we continue to close out. Yeah, for sure. Yeah, I found you on Twitter. I know we're not pattern traders, but the rising works. Yeah, whenever I'm looking at sort of pennants and rising wedges wise, I'm looking at going, this retail is about, I use this as like reasons to do the opposite. If we look at yesterday's price action, if you're on my Twitter, you'll notice that I was looking at, I put out recently a thread on the New York AM session reversal, right? And this is, it was classic indication of that yesterday, of what we had. I didn't manage to catch the short because I was looking for a higher time frame PD array. I was looking for the buy side to get purged and run up into a higher price before dumping during the New York AM session. But the premise is there, and I'll talk you through it very, very briefly. So what we're looking for is when price is expanding heavily from Asia. Okay, and the Asia low does not get purged. Okay, so we have the high and the low. And at no point does the Asia low get purged. So you're expecting later in the day for the Asia low to get purged, right? Price moves higher. London rebalances the previous displacement leg. All right? So if we just... During London, we rebalance this price leg. But during New York, you're expecting a higher time frame PD array to be tagged. And at that point is when you go short. First target, 50% of the range. It's your first target. Second target, Asia low. Sweep of the Asia low. So you literally have your stop there. So why do you think yesterday I went long here. I didn't catch this, but I stayed super patient and went long here. Rode it up to here, and then rode this from here to here. And then in the PM session, rode this from here to here, I believe it was. They were in my trade yesterday. That, and that. So this is exactly why I went long here, right? Because I was putting two things into context. The first one is that we swept the Asia low, okay, using an AM session reversal back down into a discount of this range, back into the BPR on the daily time frame inside of that broadening formation, right? But also if we jump on the 15-minute, right, this is the Asia low, right? That's the Asia low. What do we have below it? The only BISI which was left unbalanced. This is where I went long. Okay. So it's combining two things. Taking the Asia low, taking the sell side, running into a BISI inside of a 15-minute breaker. Low, high, lower, low, breaker block. Layering confluences for price to expand higher. If we have taken the sell side, what are we looking for? We're looking for the nearest breaker, are we not? The nearest breaker was on a lower time frame up here, so this is why we were driving price up to this target. Okay, so we're looking to rebalance all of these inefficiencies. So our first target was this 15-minute SIBI, and then we were looking at this 15-minute SIBI, and then there was a breaker block up there. That was the ultimate draw, and it literally hit it to a tick yesterday. Right? Simple. And then if we layer that with what was actually happening on the hourly, but on the hourly, we dipped into this BISI, sorry, took out this sell side, but look how the candles respected the order blocks on the hourly. Right? When price dipped into the 15-minute BISI and filled it and rejected, where did the volume hold? It held inside of these order blocks. Expanded higher, moved back today into 62% this range, into what? This housed order block. Moved higher, back into 62%, into what? This housed order block. So where do we sit now? For me, I'm looking for price to run back into this rejection block as a low risk entry to go long. And I'll be looking on a lower time frame when price gets down here to see how price respects it. Does that all make sense? Sergio, I need to sort out my back, bro. Like, I cannot continue to sit like the way I do. Can you guys hear that song? Oh, God. Didn't know you could hear it. I'm going to get banned from YouTube, I'm telling you. Sit like this. Sit like this. So good thing about Red Pill is we can play as much music as we want. We've got our own jukebox in there. We can play any music we want and vibe out. I hate sitting in silence. And I can't listen to my phone because my headphones don't work. God damn it! And I hate sitting in silence. It's weird. It's just weird. So let's see if price wants to drive lower now. Oh. Several DJs in Red Pill House. I don't think you've spun the decks yet, Sergio, have you? Or have you? And this is exactly why we don't take interest in this longing in a premium, right? You just become liquidity. You know, if you want to trade, if that excites you, if that gets your socks off, if that gets you entertained, there's nothing wrong with taking 5 handles. There's nothing wrong with it, but you want to be looking for trades that at least have, 10 to 15 handle range, and you're paying yourself. I don't ever want to be taking a trade that has 5 handles, because the reality is it's going to take an exceedingly long amount of time to achieve those 5 handles, and you're more than likely to become liquidity, right? So the price is more likely just to whip you out, and that's when it becomes super frustrating, right? How many times you've been in a trade and you're like, God damn it, I got the direction right, but I got whipped out by a tick, right? Hello, Mr. Engineered Liquidity. Right? You never want to be that guy. You never want to be that guy. You want to be making sure you're entering below engineered liquidity. Right? This is a prime example of it, right? All of this is just engineering liquidity. Where was the smart money buying? The smart money was buying underneath all of this engineered liquidity inside an OTE to drive price higher. That's the smart money buy. All right, not down, not up here trying to chase price higher in a premium. Not trying to chase price higher in a premium. All right, this is where you get burned. If you take anything from today, please use that as a reference. 14 likes. Hello. Appreciate you all. I appreciate you all. It's very kind. Not that I'm here for the likes, but it does the algorithm good. And I want other people to view this content. That's the whole point. So I'm here to help as many people as possible who are willing to, who want to change their lives. And if you don't believe me, check out what people are doing inside Red Pill with regards to getting funded and all that sort of stuff. We've now got people now withdrawing, which is awesome. So that's the main thing. Good old Handa has just withdrew $2,000 last week, which is cool. I'm just sat. I'm anxious now. I'm sat here waiting for YouTube to send me an email saying you're banned. They literally gave me a final warning. This is a MIT. See how that's respected. It's a MIT inside and BPR both together there. So this is like incredible. If this like stays for the open, like this is just an absolute bullseye. All right, for price to come and draw to. rejection block, equilibrium, move higher. See how it respects this level. Entering here, engineered liquidity. Where's smart money entering? Below the engine, smart. You can't help if neighbours play your music too loud. Can you imagine if they bought that? Sorry, I really am trying, but my neighbours just... Now and again, I'm going to have to put in my video. Turn it down! just to make it more realistic, right? I'll have to edit this bit out now. Yo, turn it down! Here we go. Surprised you can hear that. This mic must be picking it up pretty well. %50 of the hourly rejection block. Bum. It's too obvious for me for long, and also we're still inside that premium. If anything, I'd be looking for shorts to get us down to this target. But we have 1 hour until the news. 1 hour to the news. So price got back into. See how it's this moving price from premium to a discount, discount to a premium. Price back up into a premium of this range. $41.39. Yeah, I can see it. Yeah, of course it can get down there. I'd personally like, equilibrium with the rejection block, if I'm honest. Depends what you're classifying as the quarterly open price. The quarterly open price for me was the 4th. On 36.75 for me. Sergio, what trade you took this morning on CL, right? Amazing trade, bro. Had a really nice bounce as well. You could have taken when price got down to equilibrium, right? Back inside that hourly a wick on this candle here. Yeah, exactly. You took a so you had the obviously the purge of the buy side by a tick, aggressive displacement, and then entered somewhere in here, didn't you? And targeted this sell side, I assume. Premium, a discount of this range. Yeah, talking about that level, Sims. You've also got a 15-minute volume balance, which ties in with that as well, which are key, which is in that sort of 39.40 level. Absolute Chopsville ahead of news. There's something I'll mention in Red Pill later about this, by the way. There's something in here which is quite important. Right, guys. So you got my bias for today. I'm gonna go jump into Red Pill. I'm gonna go get myself something to eat before 8:30. I'm not doing anything now until 8:30 anyway. I won't even be trading the news. So that's gonna be me for this morning. I'll try and do this more frequently if you find value in it. But yeah, I'll wrap it up here, guys. Good luck trading if you're going to trade today. Trade safe, trade smart. Make sure if you're going to long in a discount. If you're going to short in a premium, and short on up candles, and go long on down close candles, right? And you'll be automatically a better trader. So guys, until next time, trade safe, trade smart, and I'll see you on the next one. Take care, guys.